Are you someone who is tired of losing out on offers on purchasing your dream home because it's contingent on the sale of your old home? Recasting the loan might be an option for you. Hi everybody, this is Danthika Borst with the Art of Real Estate Perfected at Keller Williams Realty. On today's edition of Danthika and Kenny Talk, we're going to talk about recasting the loan, what it is, how it works, and if it's something that you should consider. For this to work, you have to have a couple of things in place, and the first one is that you need to have a down payment saved up for the purchase of your new home. We're thinking about 5%. So now what you can do is you can go get pre-approved for a loan with that 5% and go ahead and purchase your new house. Once you're all settled in, it's time to sell your old house and pull out all the equity that has been appreciating, particularly over the last 2 years. So let's say we've sold it, we've got multiple offers, you got a chunk of change out of that sale. Now let's talk to Kenny and ask him how you can use that to reduce your monthly payment on your new home while keeping the same loan terms and interest rate, which means you're not going to have to refinance and incur more costs. Kenny, take it away. Tell them how it works.
Thanks, Danthika. Yes, recasting is a great option for someone that is wanting to sell and buy at the same time. Now, it's pretty obvious why people want to do this, right? They have equity in their home and they want to put it towards their next house to keep their monthly payment low and manageable. If you did not know, if you've never heard of recasting, you can accomplish the same goal with a lot less stress. So how does it work? Well, let's paint a scenario. I'm going to buy my next house with, let's say, minimum down. I'm gonna put a 5%, get a 5% conventional program. And then I'm gonna move, and then I'm gonna sell this house that I'm living in right now. After I sell, I can take the equity, put it towards my new house, recast or recalculate the payment. I'm gonna keep the same program, same interest rate. I'm basically just decreasing my loan amount and then recalculating it. So I achieve the same goal of a lower monthly payment that I wanted to achieve by selling and buying at the same time. However, I don't have to do it at the same time. Now I know what you're thinking. That may involve a double mortgage, right? Well, maybe. Remember, mortgages are paid in arrears, not in advance. So let's say today is February the 10th. If I was to buy my next house, my new house today and close on it, my first mortgage payment is not March the 1st, it's gonna be April the 1st. That will, let's say today, that'll give me roughly 50 days where I can still list my house, sell it, close on it before I even run into that double mortgage scenario. But if I go past that, then yes, I will have a double mortgage. So it's important that you can qualify with 2 mortgages at the same time. Now, why would someone want to recast in the first place? Well, remember, you're achieving the same goal as you set out to achieve. You just don't have to do it at the same time, the lower monthly payment. The second thing is you can completely move, right? And then sell your old house. That's so many benefits in that, because if you're doing it at the same time, sometimes there's delays in a real estate transaction that creates a lot of stress, but that stress is eliminated if you already own the next house, right? You've already moved. So now it's just a minor inconvenience versus you have the truck packed up and closing is delayed. Another benefit is showing your current house. You don't have to round up the kids, the dogs, get everyone out the house for 30 minutes, have the real estate agent and their buyer show up late anyways, and now you need to stay out another. All that stuff is eliminated. Now, let's say you want to recast. What has to happen? 3 things, in my opinion, have to happen. One is the mortgage company has to offer this, and not just the mortgage company, but the servicer. A lot of companies are in the business of just originating loans. Basically, they create a loan, they collect the fee, and then they sell the loan to someone else. If you ever heard of your loan being sold, that is the business model. So your servicer has to offer this too, and if your company sells the loan, you may not know who the servicer is. We know who our servicer is because one cool thing about Movement Mortgage is we originate loans, and for the majority, we service the loans too. So we know the servicer is us, and we offer this. The second thing is you have to be able to qualify for 2 mortgages concurrently. Hopefully you can sell your house in that little buffer, but if you can't, you have to be able to qualify. And then the third thing is when you're recasting a loan, we do have a minimum threshold of $10,000. So you have to have at least $10,000 going towards your principal payment on your next house for you to be able to recast. One important thing to note is a recast is not a refinance. So you're keeping your same terms, you're keeping your same program. We're just recalculating the the loan amount, and basically there is a small fee involved in that. It's just a processing fee of, like, let's say around, I believe it's around $200, which is a lot less than a refinance closing cost of, let's say, $4,000 or $5,000. Like, it's huge difference. It's not very expensive. So if you're interested in this, questions, comments, give me a call or send me a message. Back to you, Danthika.
Thank you, Kenny. That was great information. We'll keep sending those questions in, and every Thursday afternoon we will tackle them. Thanks again for watching, and I'll see you next week.